Hey guys, it's Nick, and I'm just looking at the market today, and it was a really ugly day. And at the end of the day, it got even uglier, especially for the Nasdaq. And things aren't any better after hours with Microsoft and Google reporting their earnings. So, is it time to look for bargains, or is this just the beginning of lower and lower prices? We have the Nasdaq back into bear market territory. Let's go look at these earnings here. So Dow was down 800, Nasdaq down almost 4% at minus 514. And Microsoft's earnings came out and they were actually good. They beat both the top and the bottom line for their third quarter results, and yet the stock is basically flat. So let's look at the main numbers. They beat on their expected revenue by a little bit. Their earnings per share, 222 versus 219 expected. And their intelligent cloud business saw a revenue increase by as much as 26% year over year, and their Azure business rose 46% year over year. So pretty positive earnings here. But you could tell what kind of market you're in, not from the earnings of a company, but how the market reacts to it. In a bull market, even with bad or neutral earnings, the stock will go up. In a bear market, even with good earnings, the stock will stay flat or go down. And as we see, Microsoft is only up 0.75% in the after hours. Google, on the other hand, is a different story. Their earnings came out and they said that their YouTube ad revenue growth slowed down dramatically in the first quarter. So their advertising sales for the first 3 months of 2022 grew 14% to 6.9 billion. That's in comparison to the same period a year ago, which grew 49%. So Alphabet's total revenue for the first quarter was 68 billion, which is up 23%, and their net income was 16.4 billion or 24.62 a share, but apparently that fell shy of Wall Street's expectations. And so what is Google doing right now? Well, it was down 3.6% on the day, and now in the after hours, it's down another 5.3%. So you're talking about a 9% drop on Google today among all the other tech high flyers that are not doing so hot either. Facebook down 3%, Nvidia down 5.6%, Amazon down 4.5%. So I look at the stock market and I look at these earnings and I look at how the market reacts to it. And it seems like we are in a bad situation that is going to get worse. So I wouldn't be backing up the truck here, trying to pick a bottom and say that the worst is over, because we still have, apparently, from what the Fed says, 6 more interest rate increases this year. And so they may say that they're going to do 6 increases, but maybe they're going to try to shock the market with one big increase, like 0.75% or even 1%, and maybe even do it in between meetings just to shock the market or something like that. So who knows? But I expect that with inflation the way it is, that running at 8%, looking at what interest rates were the last time we had this level of inflation in 1982, interest rates were like 12% or something like that. So we have a long way to go to kind of normalize the situation. The Fed knows that. And so you can expect interest rates to increase going forward, which will be bad for the stock market and tech stocks as well. And I'm sure big investors and hedge funds realize that. And that's why these stocks aren't bouncing the way they used to be on even decent news or anything like that. They are selling the news and possibly raising cash for lower prices in the future. So that's a look at what's going on in the market today. Like I said, don't bet the farm, raise some cash, because there might be a lot better prices in the future. Hope you like this video, and I'll see you in the next one. Thanks for watching, guys.